Nobody likes to admit when they're wrong, which is why I regret to this day, and I can't believe I'm going to show you this, but I let my hair grow this long, and I thought I looked good. I then decided to start a YouTube channel looking like that. So I should really go back and delete some of those videos. But that's not what we're talking about. But interestingly enough, the first video I made after then shaving my head was about Corus Entertainment. Now that stock was up 143% from the low of March 2020, courtesy of the pandemic. And I bought into that position when it was around the $6 mark. And in the video, I did say that, there were signs that the stock price might be kind of going down, that there was maybe a little bit of trouble in the water, but I had no idea by how much that the stock price was going to go down. So from the time that I made that video, the stock price has since dropped by 60%. So why am I still investing in this company? Greetings, my friends. I hope you and your investments are doing well. My name is Steve, and I am a dividend stock investor, and occasionally my crystal ball doesn't work so good, and I can't see that far into the future, which is why these videos are not financial advice and therefore entertainment purposes only. So that way I can laugh at the fact that, my unrealized gains on Corus Entertainment are around 40% right now. But hold up, Steve. A minute ago, you said that it's dropping by 60%, and now you're saying that it's gone up by 40%? Come on, what's going on? Next thing you're gonna do is ask me to hit the like button. Well, in fact, they're both true. The reason why there is a difference between those two percentages that the stock has dropped. So I've been averaging now my costs. So from the original $6 that I was paying on average, it's now down to roughly $4.01 is now my average buying price. And of course, the recent drop of the markets across the board just really help accelerate this process. The company, in my opinion, is very undervalued considering all that it owns and all that it has to offer. It has television and radio stations, the Novella animation studio, and streaming services, plus advertising revenue. A comment on my original video pointed out that they have great cash flow, an amazing payout ratio, as well as they were impressed by the way the company was paying down their debt while maintaining their dividends. And it's those dividends that I signed up for. And it's amazing to see that the dividend yield when I first started buying into Corus was around 4%, but right now it's around 10%. That's unbelievable. And then when I crunch the numbers and look at my yield on cost, so how much did it cost me to then get those dividends? It again went from that 4% to roughly then 6%. So that's a major improvement on my actual cost and how much I'm actually getting back. 6%, that's nice. That's really nice. But it's hard to ignore that dramatic price drop that we've been seeing. And while I'm investing in the long term and have no plans on selling this position anytime, I think if I would have started buying into this position 5 years ago with that same mindset, I'm going to buy into this for the long term, you would have seen an 82% drop in the stock price. So your faith in this company definitely 100% would be rattled. And looking forward, do we think it's going to get any better? Well, not really. With inflation as being as high as it is and not seeing any sign of it slowing down, companies are not putting as much money into their advertising budget, which is directly going to affect Corus's revenue. So for the next few quarters, it might be a bumpy road for them. Their earnings report for their fourth quarter comes out this week. So that will be a very, very interesting report to read. So what does this all mean for me? Well, I'm going to keep buying into Corus, especially if it's below that $4 mark. That is a good price to buy it at right now. Of course, I'm trying to keep my portfolio very diversified. So right now, Corus pays me the highest amount of dividends over all my individual stocks. So there are some other companies that I need to pay some attention to kind of get them up closer on par. So I'm most likely going to be investing into those companies for the next little while. But Corus is definitely still on the list, and I have high hopes for this company that I think once we get through all this inflation, get through a potential recession, that they are poised to kind of really accelerate. So I think back to kind of the question of this video, was I wrong in my original assessment of the company? Well, no. I'm still planning on buying this company. I still think it is a strong dividend paying company. And I'm not alone. Like when I look on Yahoo Finance, there are other analysts who say that, this is in a buy position. It's not 100% a strong buy, but there's a lot more people who are saying that it's a buy than a sell. I hope you enjoyed this video. If you did, hit that like button. And if you enjoy this kind of content, want to see more, subscribe, hit the bell. That'd be awesome. Thank you so much. And if you are new to investing or you're looking to switch brokerages or sign up to a new one, check out the Wealthsimple Trade link down below in my description, where if you sign up and put your first $100 in, you could get up to $3,000 worth of free stock, which is pretty awesome. Until next time, guys, see you in the next video. Keep it in the green and take care. Bye.